helping you to weather good and bad economies without putting retirement on hold. This is the Tumolo Financial Podcast with Ken and Nick Tumolo. Ken and his son Nick know that creating a comprehensive financial plan can align your hard-earned life savings with your retirement goals. Consider them your retirement architects. Now, the Tumolo Financial Podcast with Ken and Nick Tumolo.
So, Ken, a lot of us look at our 401k and we are looking at it on the surface level. We just care whether it's up or down. Very few of us dive into what is actually going on in there. But Investopedia says that you should look, and what you might find is way too much tech. And of course, tech has been up, Ken, but you don't want your 401k to be a tech fund. So how do we find what our holdings are, and how do we diversify them?
Yeah, and we look back 2024, and actually I should say that whole run coming out of COVID, a lot of it was driven by 7 stocks. And you keep hearing the Magnificent 7, which a big portion of the Magnificent 7 is tech. So when you talk stock market and you talk just the S&P 500, which is kind of a representation of the whole market, it is become more and more tech heavy, whereas before you always had the NASDAQ and said it was tech. But, you know, kind of going back to things when we're doing retirement planning, because we don't want to lose focus on that. That's our main thing here. In fact, Matt and I had a Zoom this past week with someone that came in from radio, and it was really about numbers. And he was telling us, hey, I'm glad you guys started with numbers, because every single person I've gone and met with, they've started with investments, and it doesn't make sense because it's about retirement. And this guy just got it. He was an engineer, and so he has numbers driven to begin with. But in his world, you go back to like his type of job that he was doing, you're always proving it out, and it's by the numbers. And why would you need an engineer then? I mean, so it's you need them. You need things to be put together and done the correct way. So in his world, he just got it. So when you're doing it, we always want to start with the numbers. We don't want to just start with the market. And by the numbers, what I mean is really how much do you spend? What does your lifestyle entail? What are those dreams? What are you trying to accomplish in retirement? You work your whole life, but now how do you put that picture together to get through and enjoy it and do all those extra things? So you always want to build extra into the plan. And then some of us want to do something for family, making sure, let's say, our spouse is okay, or our kids are okay, or other beneficiaries. If we're single, it might be just a niece or a nephew. We're trying to take care of her multiple. So what you're doing is you're looking at that whole entire picture. You work the numbers out, and then after you work out the numbers, then you should be looking at the investing side of it. So that's what I mean by we don't want to lose focus. So after we're looking at that, then you're matching up the investments. And that's where we start to look at what is the market doing, okay? And then how heavy are you in certain areas? And we'll call it sectors is probably the easiest way to put it. And we can argue that the tech sector has been so strong. So when you're building a portfolio, and here's another thing that people always hear, more risk, more reward. But with more risk, there's not always more reward. There could be more we'll call it failure or downside, because if those are usually the stocks that you're taking risks on, that when things go south, you go south a lot more. Mm-hmm. And so when you're building a retirement plan, one, you have to mix in the things like the tech sector, but not the whole entire picture. And it's really based on someone's risk and what they saved and what their goals, dreams, and so forth are. How do you mix all of that into the picture, and how much risk should you be taking as far as the listener when we're building this for them? So we're looking at the risk level, then also building in some middle of the road. So we'll call tech the higher risk stuff, even though we can argue that like Apple has been around forever. So how much risk is really there? There's still risk. But we'll throw Apple at the tech side. We'll call it a little bit more riskier because it's in the tech sector. And then we'll kind of throw the middle of the road type of stuff like the Coca-Colas and Pepsis and Kimberly-Clark type stuff. And then on the lower end of it, you've got bonds, treasuries, CDs, fixed index annuities. So the safer stuff. So what you're really doing is balancing out a person's picture And we work it backwards by what they spend, what their lifestyle costs, because we always want to have a backup. So let's say the market does go south and the tech stocks are dropping, even your middle of the road stuff like the Coca-Cola stuff is dropping too. The worst thing that you want to do is in a down market, sell that. And especially if it's sitting in an IRA, you're selling at a loss or in a down period. But also to take money out, you're paying taxes on that too. So you're taking that money out and really getting hit. So you're getting a double whammy there. And you don't want that. So you want that backup. And what I mean by the backup, at that point, we would be drawing from the treasuries, the CDs, the fixed index annuity stuff, because those are things that didn't go down. So kind of a little look at how we build retirement plans. It's the numbers first, the planning, the strategies, the tax piece of it, and so forth. And then we build the investments around that to accomplish what someone needs going in and through retirement. So always starts with the Tumolo Financial Retirement Checkup. You need to know those numbers. We offer that out complimentary to our listeners, 860-854-3434.
Investment advice offered through Tumolo Wealth Management, a Connecticut-registered investment advisor. Content contained herein should not be construed as an offer or solicitation for investment advice or for the purchase or sale of any security, insurance, or other investment product. Please consult with a qualified financial, tax, accounting, or legal professional before implementing any ideas or strategies discussed here.